Good morning, everyone. Today is November 8th, a few days after the election. We saw a continued market rise yesterday. We'll see how that continues on into today, and if we see any sell-off. We got some exciting topics to talk to you about. One is the Fed came out with their quarter-point reduction yesterday as expected, so I'll hit on that. Another one is one of our ego exponential growth opportunity stocks, Toast. We had our second stock cross that 100% return, basically double threshold earlier today. And Corey's going to dive into, a measure of market breadth, stocks that are going over a 50-day high, 200-day high, things that are going up. He's going to cover that, kind of that technical to say it's not just those top 7 or 10 stocks that you can name, it's a lot of other ones. But before we get started, I'll remind you this is a financial education presentation. You must do your own due diligence on anything heard in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So let me start off. I'm going to share my screen, show you this news. Basically, the Fed cut the discount rate a quarter point. Back in September, they cut it a half a point. And what they're doing is forecasting future cuts. So what this is right now we're in a restrictive monetary policy, and the Fed wants to get it to at least a neutral level as long as inflation stays under control. If inflation starts to go under, starts to rise, then they will have to adjust accordingly. So this is all market communications. There was no surprises yesterday. In fact, that's probably why you didn't even realize that it happened yesterday, maybe. Everything was as expected. I know that for December, I saw the latest forecast was a 70% chance of another quarter point cut, and then next year, I don't know, and it's hard to forecast out, but 3 or 4 cuts and getting it towards that. So it's kind of the no news is good news on this one. I did think it was interesting is when they were questioning Powell. He's the Fed chairman, and they were like, hey, new administration, are you going to get fired? And there was a little banter back and forth like, oh, they can't just fire me. I'm appointed. So we'll see where this goes. Donald Trump in the past has kind of said things that he thinks the Fed should do, but he's really not in charge of the Fed. The Fed's meant to run independent of the president, managing the business accordingly. And I will say that Powell has done a good job coming into this year. Everybody wanted to hit a soft landing, which means we don't go into a recession, yet we're able to get inflation under control. And here we are in November, and it looks pretty solid right now. I don't think anybody's talking about anything other than a soft landing. So that's an indication of just how good a job Powell has done. Next topic I want to talk about is a company coming out with earnings called Toast. And let me show you their earnings. They came out with 1.31 billion, which is higher than 1.29 billion. But the bigger part, earnings per share, 7 cents versus a penny. So you could say that's 7 times higher, but still, at least they're profitable. This is one of our ego stocks that we went into at the beginning of this year. We picked 10 stocks, exponential growth opportunities. These are aggressive stocks that, they can double and triple, and they can also drop by 50%. So I'm not going to say that everyone doubles and triples, or otherwise we would just invest in those. But this is our second one that's doubled. So with these earnings today and the market going up, this one has doubled. Now, what does Toast do? You may have already used Toast and you just didn't know it. So when you go to restaurants, it used to be back the old cash register days for anybody that remembers those. And nowadays, there's things where you can scan your cell phone, use your cell phone to do Apple Pay or whatever, or they'll bring your bill to your table and it'll have a barcode and you can scan it and pay it. These are things that use Toast software. So they do restaurant software, which guess what? Restaurants come and go, but the software that's needed to help run these restaurants away from a cashier or a cash register is out there. And that's the the reason why we invested in this company. So here, let's take a look at what they are doing with their earnings today. Here, I'll pull it back to just a 1-month graph so you can see, like, wow, there's a surge up. It took a while. So I'm going to pull the year to date, and you can see that this is a year to date graph, and it is up. Let's see here. What does it say? 97%. But you can see we purchased this back in January, somewhere in the, I want to say it was around $17 a share. And, it went up initially, and then it kind of sat for a long time. And you might get bored with it. You might say, well, I'm up, but it really hasn't done anything until this past week. Here we go. And it just moved from 30 to 35, which is a, 18%, a significant move in the last week. And that's where we crossed that doubling threshold. Market cap 19 billion. So it's not what I would consider a large company. It's, technically really more like a mid cap. And the advantage of investing in companies like this is they got a chance to really grow. It's hard to fathom like an Apple doubling in 1 year. I would say it with NVIDIA, but it actually did. It's hard to fathom some of these huge companies doubling. But when you take a company the size of Toast or the size of Palantir, that was our other one that it's more than doubled. You take a company that size, they can double and triple in a year, but they can also go down 50% too. So, there's always risk reward with these. These are only in very high risk accounts or people that are willing to take that risk because there's some big drops. So for example, when Toast hit, say 27, it went down to 21. So 6 over 27, you're talking, almost a 20% drop. So when you're in these kind of companies, they can drop 20% on, could be in earnings, could be just market movement. So it's hard to stay in sometimes unless you're really set up for that risk allocation. So just want to call that out. A team came up with that. I'll give Jaden a specific shout out because he was the one that brought this idea to our team, and we reviewed it and said, yeah, we like it. And then we put it in our ego stocks, and I'm sure it's happy news when you see that our overall investment thesis play out like this. With that, I will turn this over to Corey, and he's going to talk about market breadth.
Thanks, Mike. Yeah, just real quick here, something that has kind of been, and again, I like to look at those internals of the market. We're obviously in a bull market. We're in a huge rally, kind of a rally to all-time highs, of course. So, and new all-time highs, I think 50, I think we're at about 50 days this year of new all-time highs. So for good years, that's a little bit above average. But of course, there's years where there are 0 new all-time highs. So we like the years where there's 50 of them. But as those new highs come and come and come, you're kind of watching under the surface. So this is for the S&P 500. How many stocks in the red line are above their 200-day moving average? So that you're going to see less volatility there. That's a long moving average. It's averaging the price action of the 200 prior days for a given stock. And then that green line is the 50-day. So you'll see that swing up and down more. If a stock moves 10%, it's probably going to fall, either below or above its 50-day moving average. It can happen quick. All right, so what we were noticing leading up to the election, the number of stocks above their 50-day, their 200-day, it was at about 80%. That's about as high as we've seen in the past year. So, you're kind of running pretty hot there. It had fallen from about 80% down to 68%. So but more importantly than it just falling, it was sort of, people were wondering, is this going to start trending down? And that's something to watch for. The market hadn't fallen 12%, right? But that internal metric was showing some weakness. What about the 50-day? It was up at 80% too. It had fallen below 50% on Halloween, a little bit spooky there. Since then, and of course, that huge election rally has pushed breadth back up. So now that 200-day back up to 74% as of yesterday, and the market's red, green again today. And then the 50-day ripped from in the 40s up to 64. So we've definitely seen a ton of stocks back on that 52-week high list this week. Market breadth could be returning, and between now and the end of the year, there's not a lot of data coming that should be very scary. So I don't want to say it's a full-on green light for the end of the year, but I don't know what selling reasons are really pushing people out right now.
Yeah, and I want to add on to a couple things Corey said. So it's talked about 50 new highs, and I know there's always a temptation to say, "Hey, I want to sell when it's high, and I want to buy when it's low." Well, here's the thing: is if you get to that thing, what if on the 10th new high you're like, "Hey, it's high, I'm going to sell, and I'm gonna buy back when it's low," and it never comes down again. It's very hard to buy back into the market, and that's why we stay invested all the time. I mean, we're not trading in and out of the market. We're making decisions based on different factors, but we're staying invested because when 10th high, the 20th high, now we're at the 50th all-time high this year, and if you look at over the last 50 years, it always gets higher, and we're going to make that assumption going forward for the next whatever years. It's going to always get higher. There will be times when there's things you can buy on sale, but overall the market goes up in the long term. So year to year, we don't know. That's why Corey said that, like there's some years there is no new all-time highs. 2022, I'd have to look. Maybe the beginning of the year there was,
Yeah, I think it was like January 2nd or something.
but
Yeah.
but then it was lows after that. So there can
Yeah.
be years like that. The other thing is Corey said about as far as the number of companies going to those 50-day and 200-day technical analysis. If there's only, let's say, the Mag 7, or I call it the top 10, if it's only the top 10 stocks making the all-time highs, there's always a danger that they can just come crashing right back down. So what we actually want is the breadth to expand to the entire market where everything's kind of going up, or everything that should go up goes up. And that's just a better way to invest. It's a better representation of an overall economy, because not everybody works for those 10 companies. We want this entire country, I mean, obviously the world, but certainly the country, to do very well with these companies. So the technical analysis that he provides there is really good. Do you need to know that, understand it? Probably not. That's what we do, but it allows us to make decisions on where the market is, if it's overbought or not. So with that, it has been a very good week in the market. We got a few more hours. Obviously, we're really happy with where things are at so far. We'll see where this goes. I guarantee we'll be talking about elections, policies, tariffs, taxes, debt. I mean, we're going to be talking about this over the next, forever. But anyways, these things all impact the market. But I will always say that, presidents get too much credit and too much blame. Or they take too much credit and they're given too much blame by their opponents. The business cycle runs independent. I'm glad to see the market react with the thought of having less regulation and maybe reduced taxes. The market goes up. Did anything technically change in the last 2 days? Well, it doesn't happen until January 20th. No, absolutely nothing happened other than the market got clarity. And if you always remember, the market likes clarity. When the market's not sure who's going to be president, if the election's going to be over, all those things are like unknowns. We got clarity in that a winner was picked, and we know where we're going. Now the market can move higher with that. So that's the primary reason. So with that, have a great weekend, and we will talk to you all next week. Bye.